Hi, my name is Hans Johnson. I'm a demographer with the Public Policy Institute of California, and I'm going to talk to you about housing in California. It is hard to overstate the importance of housing issues in California and the United States. Certainly, housing was one of the precipitating factors that led to the very severe recession that, while technically over, still remains with us with very high unemployment rates. What I'm going to do in this talk is briefly provide you with an overview of California's housing market. First of all, I'll talk a little bit about where we've been, then I'll talk about where we are right now, and then finally, we'll look at where we might be headed in the future. So first, where have we been? Well, it's important to keep in mind that housing and housing prices are very cyclical. That's true in the United States, but even more so in California. And the reason it's more cyclical in California is that we have been at the forefront of growth, and when that growth slows, we are at the forefront of the decline. It's also important to keep in mind that not too long ago, we were talking about a very different housing crisis. About 5 years ago, we were talking about lack of affordability, rapidly increasing prices, and new housing construction that, while very robust, was not keeping up with demand. Let me throw out some statistics. Between 1996 and 2006, median housing values in California increased from around $150,000 to $500,000. That's for the median priced house. Expensive metropolitan areas like San Jose became even more expensive, increasing in value from around $250,000 to $750,000. And inexpensive metropolitan areas in California became expensive metropolitan areas. Places like the Inland Empire saw prices increase from less than $100,000 in 1996 to over $400,000 by 2006, a fourfold increase. Many of us in California were asking, how is this possible? Who is buying these homes? In fact, in 2005, PPIC issued a report, California's Newest Homeowners Affording the Unaffordable. And in that report, we found that many moderate and even modest income families were buying very expensive houses. That raised some red flags for us, and we wrote, there's something new in the latest run-up of California's already staggering housing prices. It is the financial lengths to which buyers are willing to go to buy a home and the willingness of banks and lenders to accommodate them. The share of income spent on housing is higher for homeowners in California than in any other state. Many are financially extended or even financially stressed. We cautioned that many home buyers lacked full information about the loans that they were taking out and that they could be unknowingly affected by future fluctuations in the labor market and unprepared for sizable increases in future monthly payments. We issued that report before the housing bust began, and unfortunately, many of those concerns have been realized. So that brings us to the present. Where are we today? Well, prices and values have declined. Statewide, prices are down over 40% from the peak to now slightly less than $300,000. Inland areas of the state have been especially hard hit. They were the locus of growth, so it's not surprising that they have been the locus of the impact. Adjusting for inflation, homes in the northern San Joaquin Valley are worth less today than they were in 1996 before the run-up began. And in Southern California, in the Inland Empire, values are down by over 50%. Moreover, almost 1/3 of California homeowners owe more on their house than it is worth. That is being called underwater, ranking California 5th highest among the states. Foreclosure rates remain stubbornly high. They have come down a bit, but they are still higher in California than in the rest of the nation, and over 40% of houses sold in California are either foreclosed homes or short sales. Housing construction remains anemic, with a third straight year of fewer than 50,000 new housing units built in our state, compared to around 200,000 housing units built in 2005. So most of the news at the present time remains fairly bad. At best, we are bouncing along at the bottom of the housing market. So where are we headed? Well, there are some silver linings, and there are some indications that we might expect strong and increasing demand for housing and home ownership going forward. First, the vast majority of Californians, including renters, do want to own their own home. And because home ownership rates are low in California, there's a lot of room for upward movement. Moreover, houses in California are the most affordable that they have ever been, at least since we've been keeping records. Low prices and low interest rates mean that in 23 of the state's 28 metropolitan areas, over half of families can afford the median priced home. And even in San Jose, the state's most expensive metropolitan area, half of families can afford the median priced home because incomes are so very high there, and as in the rest of the state and nation, interest rates remain very, very low. In California's inland areas, affordability is even more widespread. For example, in Merced, 90% of families can afford the median-priced house of $105,000. And so what do you get for that $105,000? Well, first of all, with a 10% down payment and a 30-year fixed-rate mortgage, your loan amount is only $433 per month. And you get a 4-bedroom, 2-bath, 1,800-square-foot house built in 2006 at the end of a cul-de-sac. In fact, in Merced, it is cheaper to own than it is to rent. Indeed, in California's 8 largest cities, in only one of those cities, is it substantially cheaper to rent than it is to buy. That city, of course, is San Francisco. Moreover, and as is so often the case, demography is our friend here. Not only is the state's population continuing to increase, but the largest increases are for people in their 20s and 30s. That is the echo of the baby boom. These are people who will be establishing their own households and therefore driving up the demand for housing. Finally, California remains a desirable state to live. An annual survey of US adults asks, if you could live in any state in the country other than the one you live in now, which state would you live in? California has come in first place for 7 years in a row. Still, the future is highly uncertain. We have large numbers of homeowners who are underwater, more foreclosures are coming, unemployment rates remain high, and obtaining financing has become more difficult. My goal in this quick temporal tour of housing in California reminds us not to be too optimistic during a boom, but also I think we should not be too pessimistic during a bust. Thank you for listening.